The COVID-19 crisis created the biggest stress test most consumer staples companies have ever faced. Some results could be expected, such as a sales decline for some categories or the rapid acceleration of e-commerce. Other outcomes were more surprising. For example, to provide consumers with the most essential supplies, companies were compelled to broadly assess their product portfolio. And as a result, we're seeing some companies reduce SKU counts and number of brands dramatically. In fact, many companies are taking a clean sheet of paper approach to go after cost and revenue opportunities.
The increasing pressure on Huawei and ZTE had a profound impact on the telecom sector in 2020. On the eve of 5G rollouts, mobile operators have had to completely rethink their network plans to comply with new government restrictions introduced at short notice. In part, this has led to cost pressure, but it's also driving innovation in the sector, with investment flooding into new technologies such as Open RAN.
There were two big surprises for healthcare resulting from the pandemic in 2020. Firstly, the speed with which the industry mobilized in responding to the crisis in terms of providing immediate solutions such as ramping personal protective equipment, testing capacity, and ventilator production. Secondly, the amazing level of unprecedented collaboration between the private sector, academic sector, and the government in developing the first effective vaccines in just 11 months, shattering prior vaccine development timelines by several years. We think this rapid development cycle bodes very well for future vaccines.
In 2020, the COVID-19 pandemic had the biggest impact on emerging markets financials, especially on financial inclusion companies focused on serving the underbanked retail and SME segments. Although the pandemic was largely negative for both the fundamentals and valuation of the sector, it did have a positive effect by accelerating the digitization and fintech evolution, which helped increase efficiency.
After a number of years of flat to declining earnings, the mail sector has seen a sudden change in fortunes. Historically, the growth of parcels due to e-commerce volume growth was offset by a combination of letter volume declines and pricing pressure. COVID-19 drove up demand for parcel delivery and grounded passenger planes, which supported pricing in a surprisingly positive way.